All right, so in our last explainers, we really dug into the what and the how of crypto. But now we're getting to the most important question of all, the why. Why on earth was Bitcoin even created in the first place? Who's the mystery person behind it? And what is the deal with that 21 million coin limit? Trust me, this isn't just a history lesson. Understanding where Bitcoin came from is absolutely essential to understanding what it is and why it's so important today.
To really get to the heart of Bitcoin, we have to go back in time, all the way back to this exact date, October 31st, 2008, Halloween. And at that moment, the world was in the middle of a complete and total financial meltdown. I mean, the global economy was literally on fire. Banks were collapsing and millions of people were losing everything. The fact that Bitcoin appeared right then, well, that was no accident. You see, the 2008 financial crisis was the spark. It was the catalyst for everything that followed. This wasn't just a normal recession. It felt like the entire system was failing. Lehman Brothers, an institution that had been around for 158 years, just poof, vanished overnight. Bear Stearns, gone. Washington Mutual, the biggest bank failure in U.S. history. The very foundations of our financial world were shaking. So what was the official response to this mess? Well, governments started printing money, a lot of it. We're talking trillions of dollars, basically created out of thin air, to rescue the very same institutions that caused the crisis. The fancy term was quantitative easing, but you can just think of it as hitting the print button on a massive scale. And this really gets to the core of the frustration, the injustice people felt. While trillions were flowing to save the banks, what were regular folks getting? They were getting foreclosure notices on their doors, pink slips at their jobs, and watching their retirement accounts get absolutely wiped out. The system seemed rigged to save a few at the expense of everyone else. All of this led people all over the world to ask a really deep fundamental question. A question about power, about fairness, and about money itself. How is it okay that a small, unelected group of people has the power to just create money whenever they want, devaluing the money you've saved, and basically picking who wins and who loses? It was out of that profound sense of unfairness that an answer started to emerge. And then, on that very same Halloween in 2008, a mysterious person, or maybe a group, using the name Satoshi Nakamoto, quietly published a 9-page document. They dropped it onto a little-known cryptography mailing list. And that paper? It was a blueprint. It was an answer to the very question the entire world was asking. A couple months later, on January 3rd, 2009, Satoshi officially launched the Bitcoin network by mining the very first block. And just in case anyone missed the point, they embedded this headline from the London Times right into the code. The message couldn't have been clearer. While the old system is busy bailing itself out, again, here is something new, a brand new alternative. It was a protest, literally baked into the first line of code. Which of course brings us to one of the greatest mysteries of our time. Who is Satoshi Nakamoto? Is it one person, a group of brilliant developers, maybe a government agency? The simple and kind of incredible answer is nobody knows for sure. So let's play detective for a minute. Here are the clues. We know Satoshi only ever communicated through online forums and emails. We know they wrote in flawless English but used British spellings. They clearly had an expert-level, genius-level understanding of cryptography, economics, and computer science. Then, in 2011, after getting the whole thing up and running, they just disappeared, vanished. But here's the most mind-blowing clue of all. Satoshi's wallet, which holds about 1 million Bitcoin, has never been touched. Someone created a technology now worth over $1 trillion, has a personal fortune of billions, and just walked away without ever cashing out or even taking credit. It's just wild. So, what exactly did this mysterious Satoshi create? It wasn't just another form of digital money, like PayPal or something. No, this was a totally new kind of money, one with rules that are enforced by mathematics and code, not by politicians or bankers. It was designed from the ground up to be a kind of digital gold. And right here, this is the most important difference you need to understand. The supply of money we use every day, like the US dollar, is basically unlimited. A central bank can decide to print more whenever they want. Bitcoin, on the other hand, has a fixed supply that's hard-coded into its very DNA. There will only ever be 21 million Bitcoin. That's it. Not one more, ever. This makes it the very first asset in history that is both digital and truly verifiably scarce. So how do you guarantee that scarcity? Well, Satoshi built in this absolutely brilliant mechanism called the halving. You see, new Bitcoin gets created as a reward for the computers, the miners who secure the network. But about every 4 years, that reward automatically gets sliced in half.
And you can see exactly how this plays out over time. The rate at which new Bitcoin is created slows down on a perfectly predictable schedule. It gets harder and harder to mine new Bitcoin, kind of like how it gets harder to find new gold in the ground over time. This isn't random, it's programmed economics. You have less new supply hitting the market, meeting steady or growing demand. It is programmed scarcity.
Okay, so that's the origin story. A pretty cool piece of internet history, right? But why does this experiment that was born out of the 2008 crisis still matter so much today? Well, because that quiet little experiment has exploded into a global trillion-dollar asset that is starting to fundamentally change the world of finance. People call Bitcoin digital gold all the time, and for good reason. But in many ways, it's actually an upgrade. Think about it. You can send $1 billion worth of Bitcoin anywhere in the world in minutes. Good luck trying that with gold bars. You can instantly prove it's real. And its scarcity is absolute and provable, not just an estimate. For thousands of years, gold has been a way to protect wealth from inflation. Bitcoin was built to do the exact same thing, but for our digital world.
And you know what? The world is really starting to take notice. This isn't some niche hobby for geeks anymore. BlackRock, the biggest asset manager on the planet, now offers a Bitcoin product. Publicly traded companies like MicroStrategy are holding it on their balance sheets. And, in a twist of irony you just couldn't make up, the same types of giant financial institutions that got bailed out in 2008 are now buying the very asset that was created to protest those bailouts.
But here's the real key takeaway, the thing I really want you to remember. You are still early. Despite all the noise, all the headlines, only around 5% of the world's population owns any Bitcoin at all. Learning about this right now is like learning about the internet back in 1995. The foundations are being built, but most of the world hasn't even logged on yet. Now look, Bitcoin isn't perfect. Of course not. It's volatile, it's new, and investing in it is definitely a risk. But it forces us all to ask a really powerful question. Is this the first time in human history that regular people have a real, viable alternative to government-issued money? An option that can't be inflated into oblivion or controlled by a handful of people? That right there is why it still matters. So now you know what crypto is, how the blockchain works, and the powerful why behind Bitcoin's creation. In our next explainer, we're putting the two heavyweights head-to-head, Bitcoin versus Ethereum. One is digital gold, the other is trying to become a world computer. Understanding the difference between them is absolutely essential. We're building your crypto foundation brick by brick. I'll see you for the next one.